Welcome to Brooklyn Funding Group's Broker Training Program. You're completing Module 2, Navigating BFG Loan Products. This module is designed to give you a deep understanding of our loan offerings and key lending metrics, so you can confidently structure deals and provide valuable guidance to your clients. By the end of this module, you'll be able to explain our fix and flip, new construction, bridge, and rental loan programs, understand their unique benefits, and identify the right solutions for different types of investors. Plus, we'll break down the key financial metrics, as well as the types of properties we lend on, such as single-family residences, 2 to 4 unit properties, multifamilies, condos, commercial, and mixed-use spaces. Once completed, you'll have the knowledge needed to structure deals like a pro. Let's dive into Lesson 2.1, Introduction to Loan Offerings. All of our loans fall under 2 different categories of short-term or long-term loans. Fix and flip, construction and bridge loans fall under the short-term loan category, while rental, also known as DSCR loans, fall under the long-term loan category. First up, we have fix and flip loans. These loans are perfect for investors who purchase distressed properties, renovate them, and sell them for a profit. Fix and flip terms are based on the borrower's experience. The more experience you have, the lower your down payment is, and the more you get for loan to cost. Refer to our pricing matrix for borrower qualifications. Here's what makes our fix and flip loans stand out. We cover up to 90% of the purchase price, which we call loan to cost, LTC, and up to 75% of the after repair value, RV. 100% of the rehab costs can be included in the loan, meaning your clients can finance the entire renovation process. Since this is an asset-based loan, there is no income verification required. There are also options for wrapping interest-only payments into your loan. Who is this loan for? Fix and flip loans are ideal for inexperienced and experienced real estate investors alike, who plan to renovate properties or who have strong teams in place, including contractors and real estate agents. Next, let's talk about new construction loans. These loans are specifically for investors or developers looking to build a property from the ground up or complete major structural renovations. Here are some key highlights of our new construction loans. We finance up to 90% of total project costs, including 100% of construction expenses. Total project costs means the purchase price plus the construction costs. Our loans offer high leverage financing at competitive rates for builders with experience. There are also options for wrapping interest-only payments into your new construction loan. New construction loans are perfect for experienced developers or investors who are building residential or small multi-unit condo projects and need funding to complete. Segment 3, Bridge Loans. These are short-term financing solutions used when a borrower needs to quickly secure a property or transition into long-term financing. Here's why investors love bridge loans. They offer short-term financing, usually between 6 to 12 months, with the option to extend. We can provide longer terms if needed. Up to 80% loan-to-cost LTC is covered. They provide a fast, flexible alternative to traditional financing, with no income verification required. Bridge loans are generally great for investors who need to secure a deal quickly, refinance out of another loan, partnership buyouts, or improve a property before securing long-term financing. Bridge loans are also a go-to for wholesalers. Segment 4, Rental and Debt Service Coverage Ratio, DSCR loans. Simply put, the rental income must be enough to cover the mortgage payments. These are designed for investors who want to acquire or refinance rental properties and generate long-term passive income. Key features of our rental loans include up to 80% loan-to-value. Interest rates start at 6.9%. No income verification required, as the loan is based on the property's rental income. We also take the expenses into account, such as taxes and insurance. Rental loans are ideal for landlords or investors looking to expand their rental property portfolio while keeping financing simple and efficient. Lesson 2.2, Key Lending Metrics. Now that we've covered our loan products, let's dive into the key lending metrics that will help you structure deals effectively. Now, let's discuss loan-to-cost, or LTC. This metric tells us how much of the purchase price will be covered by the lender. Let's break this down with an example. If we were providing a borrower with 80% LTC and the purchase price is $100,000, we would give them $80,000, and the borrower would be responsible for the remaining $20,000 down payment. Why does this matter? The higher the LTC, the less money the borrower needs to put down up front. This makes investing more accessible and allows clients to leverage more capital. Segment 2, After Repair Value, or ARV. This metric estimates how much a property will be worth after renovations are complete. Let's break this down with an example. Let's say the finished value of a property is $300,000 and we provide 75% ARV. The maximum loan amount we would provide for this borrower would be $225,000 or 75% of $300,000. For further clarity, here's a full scenario. A client buys a property for $150,000 and they qualify for 90% LTC, which means we would provide an initial loan amount of $135,000. Their renovation budget is $90,000, which we add to the initial loan amount for a total loan amount of $225,000. Since they expect to sell it for $300,000, this places the ARV at 75%. ARV is crucial because it helps determine whether a deal is profitable and how much funding the investor can secure. Lastly, let's go over BFG's underwriting requirements. These factors determine whether a borrower qualifies for our loan programs. Our key requirements include a minimum credit score of 600, review and qualification of a borrower's experience, where more experienced investors may qualify for higher leverage, liquidity and a borrower's ability to show enough cash reserves to cover expenses. Finally, we look at the exit strategy and that the investor must have a clear plan to sell, refinance, or rent the property. These requirements ensure that both the borrower and the lender are protected in the deal. Let's do a quick recap of what we covered in this module. BFG offers fix and flip, new construction, bridge, and rental loans to meet different investor needs. Loan-to-value LTV, loan-to-cost LTC, and after-repair value RV are key metrics that determine how much funding an investor can receive. Understanding underwriting requirements helps set proper client expectations and ensures smooth loan approvals. Now that you have a strong foundation in BFG's loan programs and lending metrics, you're ready to start structuring deals with confidence. Your next step? Take what you've learned and apply it in real-world scenarios. Try running sample deals with the BFG deal calculator and discussing financing options for potential clients with your account manager. Remember, knowledge is power, and with this knowledge, you're on the path to becoming a successful broker at BFG.